Good morning, traders. Welcome to your pre-market analysis for Monday. Let's start with the closing data from the last session. The Nifty 50 closed at 25,731.90, down by about 156 points, a 0.60%. This indicates a bearish undercurrent heading into the week. The key takeaway from the price action is that the index closed very close to the buy level of 25,722, which now becomes our immediate support. The market sentiment is cautious, and our primary job today is to see if this support holds or breaks. Deep dive into support or resistance. Now, let's get into the meat of the analysis, the support and resistance zones. Starting with the resistance ladder above us. The first major hurdle is at P1:25, 802. A move above this level could trigger a short covering rally towards R1:25, 892 and R2:25, 967. However, the real battle for the bulls will be at the 26,000 psychological mark. The cluster of resistances from R3 at 26,042 up to R6 at 26,158 represents a very strong supply zone. A decisive break above 26,158 would be needed to signal a strong bullish reversal. On the flip side, let's look at the support structure. Our immediate and most critical support is the buy level, pivot zone between 25,722 and 25,802. A break and sustained trade below 25,722 could open the doors for a slide down to S1:25, 647. If selling pressure intensifies, the next key support levels to watch are S2:25, 552 and S3:25, 494. A break below S3 would signal a much deeper correction is underway. Strategy and key levels for the day. So, what's the game plan for Monday? Scenario 1, bullish outlook. If support holds, trigger a bounce from the 25,722, 25,802 zone. Confirmation, look for positive momentum and volume on a 15-minute chart. Targets. Initial target is R1 at 25,892, followed by R2 at 25,967. Aggressive target, the upper resistance band between 26,042 and 26,100. Scenario 2, bearish outlook. If support breaks, trigger a sustained break below 25,722 with conviction. Confirmation, the break should be accompanied by high volume. Targets, the first target would be S1 at 25,647. A break below that could push the index towards S2 at 25,552. The big picture, a close below 25,550 would be a significantly bearish signal. My key levels to watch for the day are: immediate resistance, 25,802 or 25,892, strong resistance zone, 26,042, 26,158 immediate support, 25,722, critical, strong support zone, 25,647, 25,552. Final wrap-up or trade management. To summarize, the trend is negative, and we are trading near a crucial support level. The bias will remain bearish as long as we are below 25,900. Your action plan. 1. Watch the open, don't jump in at the first tick. See how the market reacts to the 25,722 level. 2. Trade the breakout, breakdown, wait for a confirmed move above or below the key levels with volume. 3. Manage risk, always use a stop loss. For long trades, a stop below 25,700 is logical. For short trades, a stop above 25,850 could be considered. Remember, the first 30 to 45 minutes are often volatile. Patience and discipline will be key. That's all for this pre-market analysis. Thank you for your time, and I wish you all a successful and profitable trading day ahead.